Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and this is the Forex weekly outlook for the week of July the 19th, 2010. Now, to get started this week, we're again going to begin with the US dollar index. What I want to point out here is that we've been in a substantial uptrend on the US dollar going back to October of 2009. I suggested about a month ago that this uptrend in the US dollar index was beginning to give way based on seasonal patterns, based on primarily the US dollar index as identified by Vantage Point, with the main crossover being the triple EMA. Now, when the triple EMA crossover makes its move to the upside or the downside, there's basically a 90% chance that the market is going to continue in that direction. Now, what that translates into is strength in the euro, strength in the pound, strength in the yen, some strength in the yen, some strength in the Canadian dollar, and things of that nature, the Swiss franc, all the things that make up the US dollar index. Now, this is not, again, steadfast that it's absolutely going to happen this way. The Canadian dollar is weakening a bit towards the end of the week, and things of that nature, but primarily the main currency driver in the US dollar index, 57%, is the euro, and that translates into the strength we're seeing in the euro US that I suggested was going to happen last week. So we will get into the euro US going into the presentation, but for now let's focus on the US dollar index and see what's happening here. We've got our key level now, the 18-day predicted moving average, which is our pivot point to the downside, 84.50, 83.65, 8,300 with a close of 82.65. Now, one thing that does concern me somewhat here is the predicted true strength indicator from Vantage Point. We still have our crossover and the trigger. We're still to the downside. However, we're in heavily oversold. We are actually in heavily oversold territory, which suggests we may see a little bit of a bounce. And again, we're going to get into that and which currencies are likely to be affected by any kind of bounce, but primarily 84.50, only a sustained break of 84.50 will take the pressure off the downside, and realistically, very likely the US dollar index is going to start, likely in the weeks and months ahead, will break that 80 level. So we'll see how that plays out, but to begin the week, nothing has changed on the US dollar index. So we're likely to see further US dollar weakness against the pound, against the euro, potentially against the yen, and potentially against the CAD. So, but what we really want to identify here clearly is, in the Forex market, do we want to be buying or selling US dollars? Well, in this particular case, going forward, we only really want to be looking to sell US dollars in the most attractive currency pairs. Now, we're going to look at the equities here and see what's happening with the equity markets, because we had a fairly vicious day actually on Friday where it sold off. We were recovering. Now we can see this long red candlestick here. Now, what I want to point out, we're in summer trading. Summer trading can be very thin and very volatile. Now, again, what usually happens when you come into Thursday and Friday trading is you're going to get excessive profit taking, and in thin markets that can cause volatile price swings. That's all I believe that happened last week. My position is that the equities will likely recover. We can see that the predicted true strength indicator from Vantage Point did not make its cross over the trigger. The predicted MACD also didn't make its crossover, and the predicted medium and long-term differences are both remaining in positive territory. So if we have strong equities and a weak US dollar, that translates into likely further pound strength, further euro strength, and so on. Now, again, we do want to expect volatility. Our main indicators, which is the 8-day crossing over the 18-day predicted moving average from Vantage Point, remains flat. The leading indicator here is the 3-day crossing over the 8-day and the 18-day. It has not crossed back over to the downside. However, we are going to see further volatility in the equity markets, but my bias remains somewhat to the top side on the equities after another pullback. I don't think we're going to break back below the 10,000 barrier next week. I think that's very unlikely. But again, with summer trading, anything is possible. But the primary indicators here from Vantage Point suggest that this move on Friday was nothing more than profit taking. Now, looking at gold contracts, another strong indicator for the US dollar, for some of those equity markets, and the correlation to the other currency pairs, gold is still holding in somewhat of a downtrend here. We've got the triple EMA crossing over here to the downside. It's been quite some time going back. I'm just going to back this out so everybody can see this. For 6 months, it's been essentially in the last 6 months we really haven't had a confirmed sell signal on the triple EMA crossover. We can see that it's tried several times. It's bounced down, hit the 18-day predicted moving average several times here, but we've never actually had a complete cross like what we have now. So this suggests that gold is going to see a further retracement lower, but again, it's still in my opinion that would be just simply corrective in nature. But to clearly identify that, again, when the triple EMA crosses, that's the 3-day and the 8-day crossing over the 18-day, and a clean cross like this, the market is likely to continue to move in that direction for at least a couple more weeks, in my opinion. But again, we'll be watching the US dollar, we'll be watching the price of crude oil, and see what happens and what the correlation continues to be. Now, speaking of crude oil, we're running a complete flat signal. The good thing is here, we've closed the week above the key area, 75.64. We are definitely going to see volatility in the crude futures contracts, but the bias clearly remains to the top side. Now, looking at the key levels, 75.64, 75.90, and 76.21 with a close of 76.01. Now, not an overly strong close, but the primary driver here is, again, in my opinion, on Friday, the thinner markets, the profit taking. Now, those same people that took profit on Friday, on Monday and Tuesday, are going to be looking for the best possible re-entry point on those long positions. So we're going to probably we can see some good support building down here around the 71 level. I don't see the market moving down that low, but we could certainly see 72, 73 before we get that bounce. But we would really like to see the 75.64 hold to begin the week, and that would get the equities and the crude oil contracts, everything moving up at the same time. That's the best case scenario here, in my opinion. So again, expect a little bit of a pullback with this volatility here, but essentially we're running a flat signal. Predicted true strength indicator, very good indicator here. We can see it's running flat above the zero line, still angling, pointing towards the upside. Predicted MACD slightly below the zero line, not a big deal. The predicted medium and long-term differences from vantage point, excellent. Overbought and oversold and directional strength indicators, they're both positive. So the majority of our indicators here suggest that crude oil is going to continue its move up. That's really sums it up there. We don't want to overly complicate our trading here. That's what I see happening, so we'll see how this plays out. Now, getting into our currency pairs this week, we're going to have a look, we're going to add the Euro Swiss franc here because I believe it's a good time to do that. Now, the Euro Swiss franc has come under extremely aggressive selling pressure. The Euro Swiss franc, just to point this out to everybody, US Swiss franc is actually not a major pair. Euro Swiss franc is. US Swiss franc is made up of Euro US and actually Euro Swiss franc. So it's worthy to monitor US Swiss franc very closely to get a very good, a more accurate gauge of what's happening with both the euro and the Swiss franc. We can see that this has been in a very